Actually, we're going to check in with Bob as we get record highs on the Dow and the NASDAQ. Morning, Bob.
Record highs, but it's getting tougher to move the market forward. We've had quite a start to the year globally as well. And you'll see here it's flattish today, essentially. And the breadth was not good yesterday. NASDAQ breadth was not good given the big moves up that we saw. So it's getting narrow, and that's an indication that the market is having some trouble moving forward. Just take a look at the sectors today. Semiconductors have been the market leader today and throughout 2021, new highs every day on the big names there. Consumer discretionary also doing well. The banks have flattened out since earnings season came up, but that's not surprised they're given the run-ups. Industrials have also flattened out in the last month or so. Consumer staples are going nowhere in 2021. They're down about 4% on the month. Utilities, another defensive group, not going anywhere. So here's the good news and bad news on everything. The good news is the markets are really roaring price-wise. We're up 15% since the election. The great triumvirate, I call it, of stimulus, vaccine rollout, and the reopening, the so-called reflation trade, as we call it. Those three factors pushing the markets to new highs. Here's the bad news. We're really stretched, folks. I mean, on every metric you want to look at. Valuation, 22.5 times 2021 earnings for the S&P. That's really stretched. Sentiment, everybody's bullish, ridiculously bullish. Technicals are stretched as well. Let's not bore you with all the details. Suffice it to say, does this matter? Yeah, it matters because it means the market is really stretched. There's very little room for error. If anything goes wrong on that great triumvirate, the stimulus, the vaccine rollout, the reopening not going well, it's going to be a problem because we don't have any room for it to sort of be forgiven. So the good news here, fourth quarter earnings, we're off to a very good start. We've got about 55 companies that have reported so far. The good news here, and by the way, this includes companies that have a November ending quarter, 87% are beating. That's really high, but it's the percentage of the beat that matters, 19%. Remember the third quarter, we had about 20% beats. They were beating by 20%. We need to see that again. The whole thesis is, it doesn't matter if we're overstretched, is because the analysts are wrong. They're underestimating. The numbers are going to come up because they're going to beat the analyst estimates. They're too conservative. So far, the bulls are right on this, and this is one of the reasons the market has been holding up so well. We're continuing to get good beats, strong beats, and we need to have a lot of positive commentary on the first quarter and the second quarter. If that doesn't happen, it's going to pull back. Here's the bad news. Once we get the earnings reports, market's not doing much. The stocks aren't doing too much. Look at the bank stocks today. Some of those big names in the bank area really haven't moved at all today. And we've gotten some nice companies that are good, decent reports from Fifth Third, Key, M&T, really haven't done too much. The other thing I want to point out, finally, is that there is a global rally going on. And the S&P, the U.S., is actually lagging in terms of where the global markets are. China's been roaring for the last several weeks and really a couple months. South Korea, Japan, even Europe is generally outperforming the United States. This is the last few weeks. Also want to point out, David, emerging markets have been doing fabulous so far this year. And really the last couple of months, as the dollar has been weaker, you see, again, even outperforming the United States. And a lot of people have been arguing international is the place to be, David, in 2021. Remember, this is all out of dollar weakness. The dollar stopped going down in the last few weeks, and these haven't been performing as well. But that's really the key metric to keep an eye on, the strength of the dollar. David, back to you.
We'll do that. Bob, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.